Well, let's turn our attention to Kirloskar Ferrous. The numbers actually in the past quarter were disappointing. Remember, this is a stock in the last 3 years that's moved from around 100 rupees all the way to around 700 rupees. To understand what's the way ahead from here on, we have Mr. R.V. Gumaste, who's the managing director of the company. Hi, Mr. Gumaste. Good morning and thanks a lot for joining in. Well, let's focus first on the volumes. It's been a soft start to the year. How do you see the volume picture pan out from here on? If you could first start by telling us about casting, where there was a small growth of only around 1%, and pig iron business. What do you end this year with on both these two segments? And then for ISMT as well, the acquired entity, how do you see the tubes and the steel sales numbers go on? Please go ahead, sir.
Yeah, on the casting front first, the quarter one was very soft. Demand from tractor sector was still not really up to the mark. And also first quarter typically has been a soft quarter. And from 15th May or end of May onwards, the things have improved. Demand for castings from tractor as well as the auto sector has picked up. And definitely I look forward to much better numbers for quarter two onwards. And we should this year achieve decent growth compared to the last year figures. And
so
moving, yeah.
What is the number, sir, for castings? What is the number? I think earlier we were talking about something in the vicinity of 1.4, 1.5 lakh, I think is what we had discussed last time. What should that number look like for casting and pig iron?
No, I think for the casting, if you look at, we have two foundries in Solapur and we are ramping up the production and sales. And second half of this year, we will have Oliver Engineering, our Punjab foundry, joining the production and sales. And we look for really more decent numbers, much better numbers towards our installed capacity now is more than 2 lakh metric ton per annum. So from that angle, I would look for a good progress in the sales volumes from casting. Give
us a number, sir. You want to give it to us? The casting business, the casting business of the core business and Oliver separately as well, or you want to give it to us? If you could break it up for us. Let's get casting out of the way first.
Yeah, first casting out of the way. Our current run rate is 13,000 metric ton per month. That's what we are doing right now. And with Oliver Foundry joining, I should add at least 1,000 tons more, and Solapur should add another 1,000 tons into quarter three at least. So these are the numbers we are looking at, I think, which will result into substantial growth for this year compared to last year.
So second half of the year will be 15,000 per month, 13 plus 1 plus 1, correct?
Yes, please.
So you're bracing for roughly 150,000 to 160,000 tons this year in terms of volumes?
See, the first thing is to cross the 40,000 per quarter. I think we are keen to look at the earliest, and subsequently we should go another 3,000 per quarter extra. We are looking at crossing more than 150,000 this year.
All right, 150,000 this year. What about margins? If you could give us a sense of blended margins in the very near term and thereafter recovery in the second half as utilizations go up, newer capacities come in. So what kind of blended margins can you give us?
No, I think we would definitely maintain the EBITDA levels of 15% and above in casting, especially the only the pig iron has been due to the entire iron and steel industry is under pressure of margins, and we continue to do that. And we are commissioning oxygen enrichment by the end of October. That should help us in increasing the pulverized coal injection, which should help us to mitigate the cost to some extent. And we are also looking for our iron ore mines to become operational, which has been the point in pending for very long, and hopefully, the light at the end of the tunnel. I expect second half that should add value to us, and thereby I think the blended margins, both the pig iron and casting, should improve in the second half of this year.
By how much?
See, it is quite dynamic. I refrain from giving numbers because they could go absolutely wrong because of the movement both on the product pricing. Commodity and pig iron has been very, very, unpredictable.
Okay. But, the blended margin that we are working with for as the end of first quarter is around 11%. So you're saying quarter two will be a little softer because pig iron prices as well will be under pressure. And then we'll see the recovery in the second half of the year. Is that correct, sir?
No, I think I expect improvement in the overall margin even for quarter two. And quarter 3 and 4 should be better than quarter 2.
Got it. All right. So for the year, sir, should we work with an average margin of around 13-14% at least?
No, I think our effort would be to recover our 15% margin.
Got it. Oh, that will be good news then. Superb. Also, you briefly mentioned this iron ore mines. Are they operational now? The last time around when we chatted, you said you're expecting at least 2.5 lakh tons from that iron mine, which could help you all save roughly around 40-50 crores. Is that on course?
The volume, first year volume would be 2.2 lakh metric ton mining and to be moved to our factories. And next year, I can expect it to go to 2.4 lakh metric ton with only one mine, which is likely to become operational shortly.
Okay. All right. Very quickly, sir, you've been talking about some capacity addition, some focus on cost saving as well. Last year, capital expenditure was around 520 crores. For this year, what is your total capital expenditure? And currently, what is the debt in its books? Where does it go to?
I think the capital expenditure even in this year would be in the range of 500 to 600 crores. Okay. And the debt levels will remain same in the range of about 800 to 1,000 crores. No major shift. I think most of the projects are getting funded with the cash we generate.
Pleasure talking to you, Mr. Gumaste. Thanks a lot for joining in here on CNBC-TV18. The endeavors to move back to around 15%. You're optimistic that things improve and the debt number will hold at around that 800 to around 1,000 crores odd. Thanks a lot for joining. For the time being, the stock is under pressure. But as I mentioned, in the last few years, it's up nearly around 5 times odd. For the time being, slip into a short break. Come back. We'll continue to focus on the markets that have seen a big recovery from the low point of the day.